Again, we're given a lot of information about this firm that I duplicated right over here for convenience, and we're going to find net income, operating cash flow from assets, and some other stuff. Let's start with net income. Let me first copy the format here. Let's calculate earnings before taxes. Sales minus costs minus depreciation minus interest expense. Dividends are not part of earnings. And that's it. Let's calculate taxes, earnings before taxes times tax rate, and net income is simply earnings before taxes minus taxes. For completeness, let's just put it there. Now, operating cash flow. Well, we know that one way to do that is take net income, add back depreciation and interest expense. Cash flow from assets. There are two ways to do it, but the one way is OCF minus change in net working capital minus net capital spending. So let's calculate change in current assets, change in current liabilities, change in net working capital. I'll go fancy on you guys. Actually, let me changing current assets. At the end of the year, current assets were that minus beginning current assets, ending current liabilities minus beginning current liabilities, and net working capital change is simply changing current assets minus changing current liabilities. Next, we need to calculate let me see. Just gonna copy these things and change the content later. Change in net fixed assets and net capital spending. Well, change in net fixed assets is, where are you? Ending net fixed assets minus beginning net fixed assets. Net capital spending is simply changing net fixed assets plus depreciation. Hence, cash flow from assets is OCF minus change in net working capital minus net capital spending. And this one asks, is this possible? The reason it's asking, it's negative cash flow from assets. Of course it is possible. If you lost money it is indeed possible. Of course, you need to finance it from somewhere, because cash flow from assets has to equal sum of cash flow to creditors and cash flow to stockholders. Where let's put that in as well. That means either we raise new equity from stockholders or new debt from creditors, or a combination thereof. Now, the last part is, if no new debt was issued during the year, what is the cash flow to creditors? Well, if there is no new debt, cash flow to creditors is simply the interest expense. As you can see, not only cash flow from assets is negative, we also paid money to creditors, which means we must have gotten some money from the stockholders. So it says, what is the cash flow to stockholders? Well, cash flow to stockholders is simple, because cash flow from assets has to equal sum of cash flow to creditors and cash flow to stockholders. So it's going to be cash flow from assets minus cash flow to creditors. Again, this negative number means we have cash flow from stockholders. We raised equity that is over and above. We raised some equity from the shareholders. Remember, we also paid some dividends. So if we wanted to figure it out, the sum of the amount of equity we raised and the dividends has to equal 910. Even though this question doesn't ask, net new equity is cash flow from stockholders minus the dividends. So we indeed raised a lot of new equity.